So capital gains, that's a term that a lot of people have heard about, but many don't understand. Can you expand on what capital gains is?
So in a basic sense, capital gain is when you sell an asset and you sell it for more than you bought it for. That difference, that's your capital gain that is subject to taxation. And those types of gains have very specific rules of how they're taxed and what tax rates they're charged. And there are certainly some exclusions available for homeowners relative to capital gains. So that's important to remember. A home is really a personal asset as opposed to, say, a stock or something you buy as an investment that has capital gains when you sell it also. But your home is really potentially can have a very significant capital gain when you sell it. And it is subject to taxation. And there certainly are some considerations revolving around that situation of home ownership and capital gains. Primary residence potentially has up to an exclusion of part of the capital gain. For a single taxpayer, the $250,000 gain exclusion, and for a married couple, it's a $1,000 gain exclusion. That exclusion is not based on the selling price of the home. It's really based only on that gain portion. So you could be selling a $2 million home, but if your gain on that sale is only, $200,000 as a single person, you'll still be fully excluded and paid no income tax or no capital gains tax on that sale. So the exclusion is tied to the gain amount, not the selling price of the home. There are some rules around that exclusion, as you would imagine. The base rules are you have to own and live in the home as your primary residence for 2 out of the last 5 years, a total of 720 days in the last 5 years from date of sale. If you owned it and lived in it as your primary, it is eligible for this exclusion.